Bitcoin reaching $105,000 is not only a milestone, but also a reflection of a market in full transformation. Over the past few days, we have seen impressive growth not only in BTC but also in other cryptos such as Ethereum and Dogecoin. What draws the most attention, however, is the appreciation of the entire crypto sector, which rose 3.12% and reached a total economy of $3.63 trillion. And why is this happening now? Well, we have two big forces at play: the Trump pump and institutional adoption. Hello, Oliver here once again. I hope you are ready for another video from the Bitcoin Now channel. First, let's talk about the Trump pump. With Donald Trump's imminent inauguration as president in 2025, there is a lot of speculation about how his administration could affect the crypto market. Some believe that with his more pro-innovation and financial market stance, he could create a friendlier environment for Bitcoin and other cryptos. The expectation is that his leadership will bring greater legitimacy to the sector, with even discussions about the US government acquiring Bitcoin as a strategic reserve. This would cause the value of Bitcoin and other cryptos to skyrocket, due to greater investor confidence. But is the Trump pump the only explanation for this rise? No. Institutional adoption is accelerating impressively and also plays a key role in this growth. Large financial institutions, previously cautious about the crypto market, are now going all in, bringing more legitimacy and money to the sector. We are seeing pension funds, which would normally be risk-averse, starting to invest in Bitcoin, attracted by the promise of big returns. And what does this mean for you, investor or enthusiast? It means that Bitcoin is becoming increasingly mainstream, more secure and more integrated into the global financial system. Now, of course, this also brings a more volatile scenario. Increased confidence from large institutions can result in rapid and sometimes drastic changes in prices. But for the most part, we are seeing more stability and confidence in the market. This, in turn, is attracting more investors of all types, from small traders to large global funds. And what can we expect next? Will the Trump pump really happen, or are we just witnessing the beginning of even greater institutional adoption? Stay tuned, because in the next segment, we'll dive deeper into this impact and what it means for the future of Bitcoin and the crypto economy. Institutional adoption of cryptocurrencies is not new, but it is accelerating impressively. Large players in the financial market, such as investment banks, hedge funds, and even large companies like Tesla, are increasingly incorporating Bitcoin and other cryptos into their asset portfolios. What does this mean for the market? In simple terms, the entry of these institutions brings a huge injection of capital, which increases market liquidity and, consequently, the value of cryptocurrencies. This change is happening for several reasons. The first is the recognition that Bitcoin and other cryptos are not just a fad. They are becoming a legitimate asset class capable of offering an alternative to traditional money and even gold. Many institutional investors are beginning to view Bitcoin as digital gold, a secure store of value that can protect against inflation and the devaluation of fiat currencies. Furthermore, cryptos have the potential to generate significant returns. The high volatility of the crypto market, which scared many investors previously, is now being seen as a profit opportunity, especially for those who are willing to take risks. The astronomical returns that Bitcoin has had in recent years are an irresistible attraction for pension funds and large corporations looking to diversify their portfolios and find new ways to increase their profits. But institutional adoption is not just a matter of direct investments. Large institutions are also helping to shape the infrastructure of the crypto market, making it more accessible and secure. We are seeing the creation of new financial products linked to crypto, such as Bitcoin ETFs, futures, and options, which are attracting an even larger investor base. These products allow traditional investors to access the cryptocurrency market without having to directly purchase and store the coins, which facilitates entry into the sector. Furthermore, regulations are starting to catch up with this growth. Although the crypto market still faces regulatory challenges, growing acceptance by financial institutions is encouraging governments to create a clearer and more supportive regulatory environment. This brings more confidence to investors, as they know that as the market grows, it will be more protected from legal risks. The question is, with so much institutional adoption happening, what does this mean for the future of Bitcoin and the crypto market in general? Soon, we will see an even more mature crypto market, with greater stability and trust. But at the same time, volatility is not going to go away. What lies ahead could be both promising and challenging, and that's what makes this time so exciting for the world of crypto. In the next segment, We will take a closer look at the effects of this institutional adoption on the price of Bitcoin and what we can expect in the near future. And don't forget to leave a like before continuing. So if you already did, let's continue. While Bitcoin and other cryptocurrencies are reaching new records, it is important to highlight that the evolution of the crypto market does not happen linearly. With increased institutional adoption comes a more complex dynamic that mixes large investments with the need for greater regulation. This scenario brings with it both opportunities and challenges. On the one hand, the participation of large financial institutions has the potential to create a more stable and predictable environment for investors. Market liquidity, for example, is increasing, which allows for greater ease in transactions and greater security. But, on the other hand, this massive participation can also be seen as a form of centralization, something that goes against the initial principles of crypto, which are based on decentralization. This dilemma is already starting to generate discussions in the crypto world. Many enthusiasts and purists of crypto philosophy are concerned about the growing influence of large corporations and governments in the market. Are we heading towards a financialization of crypto rather than a true decentralized finance revolution? It's a valid question, and it's important to closely monitor how the market will develop in the coming years. Another point to note is the impact of government regulations. As the market grows and more institutions enter, the pressure on governments to create a clearer and more robust regulatory framework only increases. While regulation can bring more security and confidence to investors, it can also limit some of the freedoms that cryptos offer. An example of this could be regulation on the custody of cryptoassets or the use of stablecoins. This type of regulation can be seen as a form of control over the market, something that many people within the crypto community fear. But, on the other hand, clearer regulation could be exactly what the market needs to consolidate once and for all. With well-defined rules, investors will have greater legal security to operate, and large companies can begin to adopt cryptos more widely, without the fear of violating unknown laws or regulations. The entry of institutions can also accelerate the creation of compliance solutions, such as auditing systems and assurances, that can make the crypto market more trustworthy for investors of all levels. Regarding the price of Bitcoin, we are seeing a direct correlation between the increase in institutional adoption and the appreciation of the currency. Bitcoin has increasingly been seen as a safe haven asset, especially in the face of economic crises and political uncertainty. It behaves, in a way, like a store of value, similar to gold, but with the advantage of being digital and accessible to anyone in the world. As more companies, governments, and investors believe in this potential, the price of Bitcoin may continue to rise, but volatility will be a factor that needs to be monitored closely. After all, in high-growth markets like crypto, even the biggest advances can be followed by sharp declines. What lies ahead could be a more regulated and institutionalized future for cryptos, but still with a lot of volatility and challenges. In the next segment, we will explore the impact these changes could have on the market and the future of Bitcoin. Now, let's talk about one of the biggest impacts of this institutional adoption: the behavior of Bitcoin's price. As we saw, the coin surpassed $105,000, a significant milestone that draws the attention of investors around the world. But what is really driving this price increase? Is it the famous Trump pump? That is, the expectation of a change in United States economic policies under the presidency of Donald Trump, or are we witnessing a broader change in the institutional adoption of cryptos? The answer could be a combination of both. Speculation surrounding Trump's inauguration is definitely generating movement in the market. Many investors believe that the new U.S. government can implement policies that favor cryptocurrencies, such as recognizing Bitcoin as a strategic store of value for the country. This could create a domino effect, with other countries and governments following suit and adopting Bitcoin into their own stores of value. This speculation is fueling a wave of optimism in the market, which in turn drives the price to new heights. However, we cannot ignore the role of institutional adoption. Companies like MicroStrategy, Tesla, and Square are purchasing large amounts of Bitcoin, not only as an investment, but also as a way to protect their assets from the devaluation of fiat currency. As a result, Bitcoin is increasingly being recognized as a safe asset in times of economic uncertainty. And this isn't just theory. The numbers are showing that demand for Bitcoin is outstripping supply. Additionally, the entry of financial institutions into the cryptocurrency market, with products such as Bitcoin ETFs and futures, is creating new ways to invest in digital currency. These products make Bitcoin more accessible to traditional investors, allowing them to gain exposure to the cryptocurrency without having to purchase it directly. With more ways to invest in Bitcoin, demand for it is likely to increase, which could continue to boost its price. However, there is a concern. The price of Bitcoin may be moving away from market reality, being driven by speculation rather than solid fundamentals. Extreme volatility is a characteristic of the crypto market, and this can be both an opportunity and a risk. If institutional investors start taking profits en masse, it could cause a significant correction in prices, which could send the market into a period of uncertainty. However, in the long term, many experts believe that Bitcoin is establishing itself as a reliable store of value. The scarcity of the asset, with only 21 million coins in circulation, and the growing acceptance by large companies and investors suggests that the price of Bitcoin can continue its upward trajectory, even if volatility continues to be a factor. However, for those investing in Bitcoin, the lesson is clear. You need to be prepared for fluctuations, as the crypto market is still highly unpredictable. The impact of the Trump pump may be temporary, but growing institutional adoption appears to be a more lasting trend. In the next segment, we will discuss the implications of this large-scale adoption for the future of crypto and Bitcoin's role as a global asset. Now that we understand the factors that are driving the price of Bitcoin, let's look at the future of crypto and how this institutional adoption could shape the global landscape. The growing acceptance of Bitcoin by large investors and institutions is changing public perception about cryptocurrencies. If before, Bitcoin and other cryptos were viewed with skepticism by many, now, they are being recognized as legitimate assets, with significant potential for long-term growth. One of the biggest questions arising from this mass adoption is the impact it will have on traditional markets and the global economy. Bitcoin, as a decentralized currency, has the potential to challenge the traditional financial system by offering an alternative to the centralized model of banks and governments. As more companies and countries adopt Bitcoin as a store of value, we could see a fundamental shift in the way money is stored, transferred, and even used. And this isn't something that's just happening on a small or niche scale. Companies like PayPal, MasterCard, and Visa are already integrating cryptos into their platforms, making it easier for people to use Bitcoin for everyday transactions. Additionally, we are seeing increasing adoption of smart contracts and other blockchain applications, which further expand the impact of crypto in the financial world. This evolution is setting the stage for what many call Web 3.0, where cryptocurrencies and blockchain technology will play a central role in a new digital economy model. And so that I can continue to bring more videos here for you, I will ask you to subscribe to the channel so you can help me spread the crypto message to more people. However, the future of Bitcoin and crypto as a whole is not without challenges. Regulation, for example, is a central topic in discussions about the future of the crypto market. As adoption increases, governments and regulators need to strike a balance between encouraging innovation and protecting investors. The risk of excessive or poorly implemented regulations could harm the sector's growth, although well-thought-out regulation can bring more confidence to institutional investors and reduce volatility. Furthermore, we have to consider the environmental issues associated with Bitcoin. The mining process, which is essential to the security of the Bitcoin network, consumes a significant amount of energy. As demand and price increase, this could become an even greater concern. However, many are looking for solutions, such as renewable energy mining, to mitigate this impact. The key to the future of crypto will be the balance between innovation, regulation, and sustainability. If governments, businesses, and developers can work together to resolve these issues, Bitcoin and other cryptocurrencies could become a fundamental part of the global economy, and what we are seeing today could be just the beginning of a financial revolution. Now, before closing, if you are curious about the crypto market and would like to know more about it, don't worry, there's a video ready for you. Just click and check it out.